Hello, and welcome to another episode of Finance First. My name is Bill Reeks, and I lead a company called the Gramercy Institute. We're a think tank for senior marketers from major financial firms. We are producing Finance First in partnership with Google, and we're very excited about that partnership. Today, I'm very pleased to bring to you an interview with Jeff Kingsley, who is the president and COO of Known. Jeff, I'm going to ask you to, if you would, please introduce yourself. Tell us a little bit more about what you do at Known and anything else you care to share along with what we're going to talk about today.
Great, Bill. Thanks. Very much appreciate the opportunity to be with you today. If you don't know Known, we're a marketing agency and company. We really provide a full suite of services for marketers, from strategy to creative to media buying, and really for a variety of different companies and industries. And as you said, my job is Chief Operating Officer, which is a great title because no one knows what that means. And, so mostly what I try to do is, I think, keep the trains running. So I focus a lot on our business, on keeping our clients happy, and really all the pieces that go into making it a successful organization. So that's a little bit about me, a little bit about Known, and I think we're going to talk about financial services today, Bill. Does that sound right?
That is it. That is it. And if you don't mind, I'll kick it off with a question to begin with. In our last episode of Finance First, we spoke about the acceleration of the adoption of digital in financial services, and I'm wondering if you can expand a little bit about this and tell us a little bit more about why this might be happening.
Sure. I think you have to start with COVID. There is a public health crisis, if you weren't aware. And so much has changed in the last year across all the industries. And when you think about things like doctor's appointments or test drives that you never would have considered in the past could be done virtually, moving to a virtual environment, and even things like farmers markets where you're showing up and buying squash, but you're making contactless payments. Just a completely different world that clearly isn't over being sort of reset yet, but has a huge impact in every industry, and this is certainly no different. I think specifically for financial services, beyond that, you have a lot of early adopters in the market for these services. As we looked at it, almost 40% of the total market, it really categorizes themselves as early adopters. And what's curious about them is what they're looking for. They're not necessarily bundling, which was an early move in sort of moving to digital. I want to make my life easier. I want to make it better. I want to make it more convenient. That might still be true, but it's not perceived the same way it is in other industries. This is a group of people who are actually kind of excited to fragment their wallets because they're looking for different accounts to provide more personalized services, easier integration with the other services and parts of their life, and not kicking cameras, and a user-friendly experience. So very different than what people in other industries might be looking for.
Yeah. Jeff, thanks very much. Can you tell us a little bit more about the impact of these early adopters?
Yeah, I think you start by looking at who these people are. So what's really interesting about early adopters for financial services is they all have a pretty high degree of confidence in their ability to determine, the benefits and the sort of risks in a new offering. So one of the things is, they're really understanding how to discern trustworthiness in the products that are being offered, which is critical, certainly in financial services, and really different from what you might see in other products. And I think about this, some of the other companies we've worked with, if you're selling olive oil in a digital environment, you're asking your consumer to risk $30 on whether the olive oil tastes good or not. And at the end of that, they like it and they buy more, or they don't, and they don't feel like they put something significant at risk. In financial services, you're really looking at a completely different game. And one of the reasons why it's such an important segment is because they have an enormous influence on the next group that's going to adopt these services. So if you look at the second wave of people who will adopt financial services as we studied it, we almost think about them as a persuadable or a follower group. And so, the first wave of adopters talks about themselves in language like excited, productive, efficient, like they really understand this stuff and they're excited to engage it. The second wave uses words like worried or overwhelmed or unclear. And so for them, they're not only not actively seeking a new set of products, they want to be left alone. And they get very nervous when they have to think about moving. And so they're really looking at this first set of adopters as the group of people that's going to chart a path for the broader market.
Yeah, Jeff, thanks for that. Let me dig a little bit deeper, if I would. In a previous episode of Finance First, we talked about how adopters are defined by a mindset, not by a demographic. Can you tell us a little bit more about that mindset?
Yeah, it's absolutely true. And there's some real surprises in the early adopters, what their mindsets might be. The first thing is it's big. I said already, it's almost 40% of the market, which is different than in a lot of other products and services where you think of almost the bleeding edge of adopters, people who are much further out on the risk curve. This is almost 40% of the market. And it also skews a lot older. 45% more or less is over the age of 45. So still hope for me to be an early adopter in some product or service. But, it's a very different group than normally sort of moves first on these products. And as you said, it's not at all a demographic. This isn't something you map to income or geography or a lot of other things. It's really about a set of attitudes around their confidence in their own sort of ability to make decisions in financial services, their openness to risk, and their initiative, their excitement and their engagement in these markets. It's really a self-starter kind of group of people. And again, like when you look at what these people are doing as a group, they're building a portfolio of services, which probably includes some established players. I might have an account at Chase. I'm looking at Ally. I might got something with TD Ameritrade. I'm dabbling with Robinhood on the side. And I've been using Apple Pay since it came out, and so those things are things I play with all the time. I'm constantly tinkering with it, and I'm trying to sort of maximize my utility in this thing as opposed to getting one thing that solves all the problems for me.
Yeah, Jeff, thanks. Tell me, do you feel that the behavior of these early adopters and followers plays out across all subcategories of financial?
Yeah, it's a great question. There's really three big buckets of categories we looked at: payments, banking, and insurance. And payments being the most mature by far is an interesting pathway for how we would expect the rest of this to go. And what we're seeing, if you look at payments as a start, is that as trust in the sort of the macro environment evolves, the expectations of the consumers do as well. So wave one, again, they're looking for differentiation, and they're thinking about things like basic expectations as table stakes. So they're assuming these products work. They're really looking to play with a lot of stuff and figure out how to push the return on these things as a portfolio. They then sort of turn around and recommend the best of breed to the second wave and the waves that are going to follow them. And those customers are still really focused on basic expectations because, again, they kind of want to be left alone in this. They're not as risk tolerant. They're not as excited to switch. So they're really focused on basic expectations. And so you have to be able to do both. But it is really that first category that's going to drive a lot of the recommendations. As payments is maturing and you're seeing people who are happy to use Apple Pay and Venmo and a bunch of other folks, we're going to see, I think, that the other categories move as well. So as people get more comfortable with banking and insurance, you're probably going to see the same kinds of adoptions there that you've seen in the payment space.
Jeff, can you tell us, please, what is it that financial marketers need to keep their eye on as we move forward into the future?
I think one of the things to keep in mind is, how this market's breaking itself into groups and what that means for how adoption is likely to go in the future. If we think about basic expectations as table stakes, I think what a lot of financial firms have focused on, certainly for the last 20, 30, 40, 50 years has been talking about stability and strength. It's where you see the Lions walking around on TV and showing how, big the vaults are on the doors in the bank. And while that might have been a competitive advantage in the past, I think now you're really looking at a group of people who want to optimize their own experience, to integrate it with the rest of their lives, and who assume that, the table stakes of security and risk management are going to be in any product that they have. So I think you have to be focused on innovation. You have to be super focused on technology, and not just the technology of your own platform, but how people are living their lives in other places, because they want this to be integrated into that as well. And really focused on, again, this large group of consumers who are early adopters and who are making decisions for the rest of the market as well.
Yeah. Jeff, I thank you so much. You've really given us an awful lot to think about. Thank you for joining us. I wish to thank our partners, Google, for putting this all together with us. This is Bill Reeks from the Gramercy Institute signing off. See you next time for our next episode of Finance First.